Hey everyone, would you believe me if I told you that I bought my first rental property when I was only 23 years old? It's true, and I did it with zero money down. Be sure to subscribe to this channel if you want to learn about real estate and real estate investing. Hi, my name is Zack Boothe, and I help people like you get into the game of real estate investing and make a lot of money. Do you guys want to own a rental property? Let me know in the comment section below. According to a recent statistic that I saw in 2019, there was 44 million residents renting single-family houses in the US, and that is predicted that there will be a 21% increase in new rental households between 2020 and 2040. Investing in rental properties can provide strong and stable cash flow for many, many years. And if I could do it at 23, you guys can do it too. So in this video, I'm going to be breaking down the factors you should consider before buying your first rental property. Most people don't have enough cash in their pockets to buy a property up front and pay it off completely. So that means you'll need to take out a loan, and the bank will ask for a down payment of 20 to 30% if you're buying it for rental. You might be thinking it's too hard to come up with enough money for a down payment. But luckily there are loopholes to this, and let me show you how. Hit that like button if you're excited to learn the tips, tricks, and strategies of this trade. The first loophole is called house hacking. House hacking is using the property as a primary residence and renting the other portion of the house. For example, this could mean you buy a duplex, you live in one unit and rent out the other so that the tenants pay your mortgage, or at least the majority of it. This arrangement can also save you a lot of money on the loan and amount of the down payment. So instead of 20%, you may only have to put down 3 to 5% depending on the type of loan you get. My very first rental property at 23 was exactly this. It was a house hack. I bought a duplex. I lived in one side and rented the other. My monthly payment, because I got such a great deal, I bought the property for only $60,000. Got a free $5,000 for my down payment. We'll talk about that maybe another time. And with that down payment, I was able to get into this duplex for $50,000. I rented out the other side for $750 a month. My monthly payment was only like $450. I don't remember the exact amount now, and was able to rent the other side for much more, of course, and I lived for free and got paid to live there. It was an incredible experience, and it was what got me so excited about real estate. I saw the potential. I know it was only $750 a month. It's not life-changing money, but the proof of concept was what was life-changing and what made me so excited about getting started and getting a ton of rentals and finding financial freedom and financial success. So I just gave a little tip of got free down money or free down payment money. So something a lot of people don't know about is that there are also grants for first-time home buyers. A grant is essentially free money that you don't have to pay back. It's money that the government gives for like first-time home buyers and other little incentive things. So make sure you ask your loan officer if there are any grants that you could qualify for to help with the down payment. So as I just said, I was able to buy that duplex for $60,000 and got a free $5,000 down payment. So when I got that property, I was talking to my loan officer and she said, well, great, Zach, you're a first-time home buyer and this is where the property is located that you're buying. The government's offering a first-time home buyer grant of $5,000. And there was some regulations around how to get it, but she helped me do it, right? I didn't have to do much at all. Just make sure you have a good loan officer, and when you start talking to and interviewing different loan officers to help you, that's one of the questions you should ask during the interview process is like, hey, do you know of any grants that are going on for first-time home buyers or anything like that? And if they don't have anything for you, they're probably not the best or the most experienced loan officers, right? Just like every industry, there's great, amazing people that love their job, and there's others that are there for the paycheck and they don't really care that much, right? So make sure you take advantage of that, especially for your first-time home buyers. There's lots of cool opportunities out there. Another way to lower the down payment is by finding the off-market properties. So properties that aren't listed on the multiple listing services. You do this yourself, right? And then you can negotiate directly with the seller. You can talk to the seller and find a way for them to be the bank for at least 12 months so you can make a smaller down payment and then refinance that loan into a long-term loan. So the next, after I bought that first duplex, the next 4 rental properties that I purchased, 3 of them I purchased with seller financing and meeting and finding the seller. So I have lots of great videos that you can see on how I find sellers and how I'm able to get in front of directly to the sellers and be able to negotiate directly with them, right? That's a huge important part of the business if you want to scale and grow. But then, like I said, 3 of those 4 next rentals, I bought seller finance. I was able to negotiate with the seller and have them be the bank. I'm going to give you an example of just one of the deals. It was a condo that I bought that's not too far from here in my office. My office is in Layton, Utah. So this condo, the seller had a couple cash offers of around $60,000. It was worth, as is, about $120,000. He wanted $80,000. He owed about $78,000 on the house, and he wanted $80,000 because he wanted $2,000 to buy a wedding ring because he wanted to get engaged, right? And he had already bought another house somewhere else, and it was just sitting there. And I said, brother, I could pay you $80,000. I could pay you $20,000 more than these other people are paying you. But here's the thing. I need to be able to structure this and make this work. If you'll be the bank for me for 12 months, I can pay $80,000. So I'll give you $2,000 cash. I'll make the payments on your existing financing. In terms, right, real estate terms, we did a wrap or a subject to finance deal. Basically, I was just paying the payments to his loan, and the title was transferred into my name. So I own the property. The financing was still in place in his name. He understood this, and I had 12 months to get new financing. But since the property was in my name, I could then go and put a tenant in place, right? And I was able to put a tenant in place, get this, for $1,200 a month. So $1,200. My monthly payment was like, on his financing, I think it was pretty high. It was like $850 or something. But when I refinanced, it was like $650, right? Because I got a lot better terms than he was able to get, right? Very low interest is what I was able to get. So I put a tenant in place and within 2 months after, in about month 6, I went to my bank, to my loan officer, and I said, I would like to refinance this house that I own. And they looked at my debt to income ratio. They asked for the lease, which helps with the debt to income. They'll take 75% of that rent income and count it towards income, right? 75% of the rent income counted towards income, which offset the debt that I was asking for the house. So it kept my debt to income at a nice flat rate, so I could just keep getting more loans, right? So I refinanced this house, and I actually refinanced it and got some cash out when I did the refi, right? And so it allowed me to not only get some cash that's tax-free, but then I lowered my interest, dropped my payment amount, and had the tenant pay for the house, right? It was an incredible deal. Love that deal. But it's just an example of what I was talking about. When taking out a loan or a refinance, like I just talked about, there's a few other things to consider. Your income and your credit score. The bank is going to look at your credit history and make sure you have good debt to income ratio, like I mentioned. I would highly recommend improving your credit score if it's below 720. And working with a loan officer that can answer all of your questions around refinances, debt to incomes, credit scores, and how to improve your credit. So improving your credit, I mean, this is a whole topic in its own, and I'm sure we'll make some new videos shortly on how to improve your credit. But I'm gonna talk just about a couple different things that'll make a big difference, right? We all know that it's so important to pay your debts on time, right? If you're not paying your debts on time, obviously it's gonna hurt your credit. It's an obvious one. But one thing that people don't know, if you have a credit card, if you use over 50% of the limit on your credit card, it's actually gonna hurt your credit. Another thing that hurts your credit is when you cancel a credit card. Let's say you pay it off. Well, don't cancel the account, but make sure it's put on hold. You cut up your cards if you don't want it. But when you close that account, it'll actually hurt it, right? It definitely helps to use less than 50% of the credit card balance and pay it off every month, or pay the monthly payment at least and stay current. If you have an outstanding balance on your credit card, that'll hurt your debt to income ratio, which is another topic. But be very careful with those credit cards. I remember when I first started and I needed to build credit, I had done basically nothing. My dad required that I bought my first truck cash. He wouldn't even co-sign a loan. And so I had bought everything cash. So when it was time to come to buy a house, I struggled. So I got a credit card. I owned a truck cash. I went to the credit union and I said, hey, like, I need to build credit. I own a truck cash. Can you give me a loan, or a little tiny loan on my truck? And they gave me a small portion of the value of the truck in a loan. And I just made payments for like 8 months. That allowed me to have enough credit to go buy a house. So be strategic, be thoughtful, talk to your loan officer. What things can we do to improve your credit, right? And I know there's credit repair companies in lots of different places, but I just wanted to share those few tips with you. Buying rental properties can be a great source to build your wealth, passive income, value increase, tax benefits, and you can take advantage of all of these different loopholes to get in the game with zero money down, just like I did, right? If you want more help figuring out the best way to invest in rental properties, book a call by clicking in the video description and check it out. We'd love to talk to you about your business and see if we can help you. Also, I want to invite you to watch this video about the best real estate strategy before you leave. And don't forget to subscribe to learn the ins and outs of real estate investing.